So how do you reduce capital gains tax when you sell a property? Well, simply put, leave the country. Yes, indeed, leave the country. Hi everyone, my name is Simon Mishevich from Optimize Accountants, and in my intro I said one of the ways to leave the UK would help you save capital gains tax. So fluffed my lines there, didn't I? It should be one of the ways to save CGT is to leave the UK, but hey ho, you're going to forgive me on that? Let's hope so. So yes, indeed, I'm talking about leaving the UK to save capital gains tax. I'm not talking about doing a runner. I'm not talking about you selling a property, getting all the money in, and then doing a runner from the UK, never to return. That is never going to be a good thing for you to do, but leaving the UK might be. So let's get into that detail. If you watch this video and you think, oh, actually, this is quite useful, then feel free to use that QR code to book a tax consultation to see if we can help you reduce your CGT liability even further. Or if you want to talk about our real estate property taxes in the UK, then again, feel free to use that QR code and book some time with our customer services manager. If you are going to book a tax consultation, use the code YouTube15 to get a 15% discount. With HMRC, as much as it wants to be concise, it is difficult to do so when it comes to capital gains tax. So they'll give you lots of information and a lot of it can be quite confusing. What I want to do is make it as simple as possible. If you're looking for a buy-to-let mortgage, by the way, again, looking for best rates can be difficult, but if you use that QR code, we'll put you in contact with the best mortgage broker that we know, and they will help you get those rates down. Again, the link will be in the description box below. Rates and allowances. Now, when we talk about capital gains tax, we need to understand what taxes you need to pay before we try and reduce it. Well, the first thing is how much money can you have tax-free? And we know that the tax rates have changed significantly. It used to be 12,300, but in the tax year 23-24, the tax-free CGT is £6,000, which will be reduced again to £3,000 from the year 24-25. Now, if you're a couple, it's worth you thinking about, can I use a deed of trust to transfer the property between spouses, which means that we get two lots of CGT allowances? Yes, indeed. And that's where you probably need to book a tax consultation to find out how you do that. As someone who is a basic rate taxpayer earning circa 50,000, then you'll be paying 18% by selling a residential property. If you're selling commercial property, then it'll be 10%. As a high rate taxpayer, though, you'll be paying 28%. So there's someone earning more than £50,000, as an example, they'll be paying 28% capital gains tax rate for selling residential property. But again, that is reduced to 20% for selling commercial property. If you're thinking about, well, I will be leaving the country and I need to find the best ways to minimize my currency exchange risks and currency exchange fees, then use that QR code and we'll make sure that you get in contact with the right organization to help you do that. Now, what happens if you leave the UK? Well, there are benefits here. What would happen is that you would rebase your cost of that property from, in this example, 1986, but you would use a cost base of April 2015, which could, at that time, the property would have increased quite significantly. And we'll see how that really helps you later on. You must stay outside the UK for 5 years. Now, if you come back with it before that period of time, there is every danger that what HMRC will say is, well, you rebased your property at April 2015. That was wrong because you've now come into the country. We want to take the cost of that property at purchase. So that means your capital gains tax liability when returning within that 5-year period will blow up again. So please do bear that in mind. Now, it does enable you to pay less CGT by leaving the country, and you'll see that as an example, but it may also help you to pay less income taxes as well. So is now the time to find a country that you want to move to in order to have a better lifestyle and pay less taxes, not just income tax, but capital gains tax as well. Not always a good reason to leave the country, I have to say, but it may be on your horizon, and therefore selling property when you leave would be the better choice. Okay, so let's look at the same example now of someone paying capital gains tax but leaving the country. So in this example, we're going to have two columns, the one previous example for the high rate taxpayer versus the high rate taxpayer that is left the country. The sales value of £300,000 is not going to change, it's the same. But the cost base now was £100,000 in the previous example, but because it's been rebased in April 2015, the cost is £250,000, which means the taxable gain is so significantly different. Before, the example was £200,000 taxable gain compared to £50,000 on the rebased valuation, which is significant. So that means that the high rate taxpayer in the previous example paying £56,000 may well end up paying just £14,000 if they decide to leave the country, which is significant in itself. That high rate taxpayer may also become a basic rate taxpayer because they have less earnings in the United Kingdom if they've already left the country. So worth thinking about when you're looking at selling a property, is now the good time to move country as well to minimize capital gains tax and potentially income tax as well.